In this video on the audit exam, we're going to go through the entire AICPA blueprint and cover all the topics you need to know. We're also going to talk about the skill allocation of remembering and understanding versus analysis. And it's going to really provide you with an outline to see if you're ready for the exam. So by explaining each of the representative tasks, you can see if you know enough of the topics to prepare for the exam. So let's start out by talking about the allocation of the topics and the skill levels that you need for the exam. Let's start out by looking at a summary of the audit exam. So there are 4 different main sections. First, we have ethics, professional responsibilities, and general principles, which is 15 to 25% of the exam. Then we have assessing risk and developing a planned response, which is 25 to 35%. From there, we have performing further procedures and obtaining evidence, which is 30 to 40%. And then we have forming conclusions and reporting, which is 10 to 20%. Now let's ask, what is the skill allocation? So we know that remembering and understanding is simply regurgitating information. Application is demonstrating that you know a concept. Analysis is looking at the interrelationship of different elements to solve the question. And evaluation is using your judgment to come to a conclusion. So you can see that mostly it's remembering and understanding and application, but with 15 to 25% analysis and 5 to 15 as evaluation. So area 1 is ethics, professional responsibilities, and general principles. First, we need to know about the AICPA Code of Professional Conduct. We need to know about the main principles, the main rules, and the main interpretations. We need to know how to apply the framework to members in public practice and members in business. So basically, we need to know about the principles and how to apply them. Next are the requirements of the Securities and Exchange Commission, the SEC, and the Public Company Accounting Oversight Board. So here we need to know the ethical and independence requirements for public company audits. Then we need to know the requirements for governmental audits, including the independence requirements for governmental audits. From there, we need to understand the concepts of professional skepticism and professional judgment. Basically, we should always keep our eyes and ears open each year in the audit for any errors that the company may have. We always need to assume that there could be something wrong with their books. Then we have the nature and scope of an audit engagement. So we need to define what the overall purpose is of an audit. For governmental audits, we need to know how to define the nature and scope of them as well. And also for review engagements as well. Then we need to consider the terms of an engagement. So when are we allowed to accept or continue an engagement, and when should we reject an engagement? From there, we have the engagement letter, which starts the audit. So we need to know what we include in the engagement letter and what we would exclude in the engagement letter. Next are the requirements for engagement documentation. So identify the elements that comprise sufficient appropriate documentation and identify the requirements for the assembly and retention of documentation. So basically, what do we need to include in this engagement documentation? Next, we have communication with management and those charged with governance. So what should we tell management and those charged with governance about the planned scope and timing of an engagement? There are certain elements that we only communicate to management and certain topics that we communicate to the upper levels, like the board of directors, which would be the category of those charged with governance. When we come across internal control matters, how should we communicate to management and to those charged with governance? Should they be in writing, or could they just be verbally communicated to them? Next, we have audit and assurance quality. So we need to identify a firm's responsibilities for the quality of its engagements to make sure that it's maintaining a high level of quality for the engagements. Now we move on to area 2. Here we assess the risk and we develop a response based on our risk assessment. So we plan an engagement. So we're past accepting the engagement, now we're planning the engagement. So we talk about the overall strategy for the audit. We also talk about our engagement plan to talk about what specific processes accounts and classes of transactions we're going to actually be testing. Then we want to understand the entity and its environment. So we want to understand external factors that help us understand its environment. We need to understand how supply and demand works. We need to understand elasticity measures and profit maximization. We also need to know about the different business cycles like a trough, expansion, peak, and recession, along with the different types of economic indicators in order to understand the entity and its environment more effectively. Then we have the internal factors to consider. This involves knowing about the Sarbanes-Oxley Act of 2002, and also looking at the nature of an entity, looking at the impact of risk of material misstatement, so that we can see how the entity works and best assess its risk. From there, we want to understand an entity's control environment and its business processes, which includes the IT systems. So we want to thoroughly know the COSO internal control integrated framework. This includes knowing the components and the principles. We need to have a good understanding of IT general controls and entity level controls. And we need to focus on business processes. So this looks at the different flow of processes, how data flows throughout the organization. We could perform a walkthrough of significant business processes, obtain an understanding of an entity's IT infrastructure. So we're trying to understand how their processes work and whether they are effective at risk assessment. The ultimate goal of looking at the business processes is to conclude whether they are effectively designed and placed in operations. Then we look at service organizations. This is talking about SOC 1 reports and SOC 2 reports. We need to know the difference between a Type 1 report and a Type 2 report, and what the overall purpose is of a SOC 1 report versus a SOC 2 report. Then we have limitations of controls and risk of management override. So we need to know, even with perfectly designed internal controls, what could possibly override the internal controls. After that, we have materiality. So first we look at materiality for the financial statements as a whole. So this is looking at the big picture materiality. And we need to know that it includes both qualitative and quantitative elements. From there, we look at tolerable misstatement and performance materiality, which are numbers that are lower than the overall materiality. So we need to know how we use the tolerable misstatement, how we calculate it, and the same for the performance materiality. Next, we have assessing and responding to risks of material misstatement, whether due to fraud or error. So we need to look at the pressures, incentives, and opportunities for fraud, of what could cause fraud to happen. We need to look at the risk of material misstatement at the financial statement level, so at a high level, and also at the relevant assertion level, so for specific classes of transactions like revenue transactions, for example. We also need to determine a response to the risks of material misstatements. We need to determine appropriate procedures to assess the operating effectiveness of the controls. We need to determine appropriate substantive procedures as a response to the risk. And we need to determine the procedures to satisfy the requirements and objectives of an attestation engagement, and also for accounting and review service engagements, such as a review or a compilation. These next several representative tasks are about assessing the risks of material misstatement and analyzing the risks of material misstatement. Lastly, we can use outputs such as reports to identify different risks that the company has. Then we have planning for and using the work of others. So we need to consider factors to determine when we want to use other parties, such as the internal auditors, an IT auditor, a specialist, management specialist, or a component auditor. So when would we want to use these different parties? And what could be the nature and scope of the work that we give to these different parties? Then we have the specific areas of engagement risk, an entity's compliance with laws and regulations. So we simply need to see whether the company is following its specific laws and regulations. And we need to perform tests of compliance to see whether they are following those laws. Then we have accounting estimates. So our role as the auditor is to determine whether they are reasonable or not. We look at the related party transactions, and we're trying to make sure that they are properly disclosed in the financial statements. Then we have uniform guidance for single audits. So if you're receiving federal assistance, then you have to follow the single audit requirements, which are more strict than the government audit requirements. Now we move on to Area 3, which is performing further procedures and obtaining evidence. This is 30 to 40% of your exam. This is essentially the field work aspect of the audit. This is when we perform all of the test work. First, we have the use of data and information. So we need to know how relational databases work, what's a table, what's a record, what's a primary and foreign key. We need to know about different measurement scales. We need to know about attribute structures, format, and sources of data. We need to know how to prepare data, clean it, and scrub data. Then we focus on performing procedures to validate the reliability of information. And then we move into data analytics. So this is how we can apply automated tools and techniques to process, organize, and structure data in order to find useful information. And lastly, we can use outputs such as reports and visualizations to determine different relationships, trends, or notable items. Then we focus on sufficient appropriate evidence. So we're going to look at the source of different audit evidence and determine its quality, meaning that a confirmation that we receive directly to the auditors is much better than a confirmation that is first sent to management and then given to us. So when we're assessing the sufficient and appropriate evidence, we need to be skeptical about its relevance, about its reliability, about its authenticity, to make sure that we can really trust in the evidence. Next, we need to worry about sampling techniques. So this involves choosing a sample out of a population and then coming to conclusions about the population based on the sample. So we need to know about different kinds of variable sampling and attribute sampling and what the sampling risks are. Next, we have the actual procedures to obtain sufficient appropriate evidence. So we have test of controls and test of details. We need to know how to use observation to obtain evidence, how to use recalculations, how to use reperformance, how to use inquiry to obtain audit documentation. So then once we inquire about something, we need to know how to follow up to those questions to get meaningful answers. We need to perform tests of operating effectiveness of internal controls, and we need to perform test of details. Then we get into the analytical procedures, which is like ratio analysis and trend analysis. So we need to determine whether we have suitable analytical procedures that we are using. An important part is developing an expectation to compare to what actually happens. And then we have to perform these wrap-up analytical procedures near the end of an engagement to make sure that we didn't miss anything and we don't need to go back and test more. From there, we have external confirmations. So this is when we send out confirmations, such as bank confirmations, to make sure that the company has the amount of cash that it actually claims to have. Next, we look at specific matters that require special consideration. Accounting estimates. So sometimes we need to recalculate how management got to their estimate or reperform to see if it's reasonable or not. So we're all focused on how reasonable the estimate is. Next are investments in securities. So we need to make sure that the disclosure of their fair value is properly recorded. And we need to make sure that management's assumptions are accurate. Then we have inventory. So we need to test the ending inventory quantities by observing the inventory to make sure that they're properly counting it. Then we have litigation claims and assessments. This is where we can send a legal inquiry letter to the company's lawyers to ask about any pending lawsuits. Then we have an entity's ability to continue as a going concern. This is where we need to determine whether company has properly responded to its risk of not continuing as a going concern. And then we have the uniform guidance for single audits. So this is talking about testing for compliance for the specific segments under a single audit. Next, we have misstatements and internal control deficiencies. So we need to prepare the corrected and uncorrected misstatements during the audit. We need to determine how much they are individually and in the aggregate. And we need to determine their impact on the nature, timing, and extent of our procedures. Next, we have written communications. So this is simply obtaining a management representation letter and knowing what's involved in the letter and what should be excluded from the letter. Then we have subsequent events and subsequently discovered facts. So what happens when we discover something after issuing the auditor's report? And how can we identify subsequent events and make sure that they're properly disclosed for? So now that we're past Area 3, we've made it to Area 4, which is forming conclusions and reporting, which makes up 10 to 20% of the exam. First, we have the reporting requirements for audit engagements. So we need to know what goes into forming an opinion and what the different types of opinions are. This applies to testing the financial statements, but also giving an opinion on the company's internal controls. So you need to understand all of these different types of opinions. You need to know how to use an emphasis of a matter paragraph versus an other matter paragraph. And you need to know in which context you'd use them, when they're required and when they're not required. Next is reporting on attestation engagements. So we need to know what should we consider when we're issuing an assertion-based examination, direct examination, or review report, and determine the appropriate form and content of the report. Next, we have agreed upon procedures engagements. So we need to know what we should consider when we issue this report and what should be included in this report. After the attestation engagements, we have the accounting and review service engagements. This includes review engagements, compilation engagements, and preparation engagements. We simply need to know what is the form of these reports and what is included in these reports. Then we have reporting on compliance. So we need to know what we should consider when we're reporting on compliance and what we would include in the compliance report. From there, we have other reporting considerations. So for example, when we have comparative financial statements, we need to make sure that they are consistent across both periods. Other information in documents with audited statements. So we need to understand our responsibility in this scenario. Sometimes we have to review interim financial information. We can have supplementary information in the financial statements. We also have different governmental requirements. And then we have special purpose frameworks, which is when we're not using the GAAP basis, but rather cash basis or tax basis, for example.